If you're trying to decide where to keep your money, you might be wondering whether a credit union or a traditional bank is the better choice. Both offer similar services and products, so knowing which one to choose can be hard. However, there are some important differences you should consider, like their purpose, ownership, and structure, what services they offer, and how much they charge in fees. In this video, we'll explain everything you need about banks versus credit unions, and which is better for keeping money. We'll talk about interest rates, how easy it is to get to your money, and how helpful their customer service is. By the end of the video, you'll know which option is right for you. So let's get started. Definition and purpose. Banks are a type of company that accepts money from people and businesses, and then uses that money to give loans, credit cards, and other financial products to people who need them. They also help people move money around, like sending money to someone in a different country or paying bills online. Banks are run to make money for their owners, but they also provide important services to the community. Credit unions, on the other hand, are owned by the people who use them. They are like a club where the members share ownership and control. Credit unions offer many of the same services as banks, like savings accounts, checking accounts, loans, and credit cards. However, they often charge lower fees and give better deals because they are not trying to make a profit for owners. Instead, they are focused on helping their members with their finances. They both offer similar services like processing payments and selling financial products, but they have different ways of doing things. Banks are usually more focused on making money and might charge you more fees and interest rates, while credit unions care more about making their members happy and offer lower fees, better interest rates, and personalized service. Ownership and structure. Banks and credit unions are different in terms of ownership and structure. Banks are usually owned by shareholders. On the other hand, credit unions are owned by their members. Banks are run by a group of people who make decisions for the whole organization, while credit unions are run by a volunteer board of directors elected by the members. This means that credit unions are more democratic and allow their members to have a direct say in how the credit union operates. Banks focus on making profits for their shareholders, which can sometimes result in higher fees for their services and lower interest rates on deposits. On the other hand, credit unions prioritize their members' satisfaction and the development of their communities. As member-owned organizations, credit unions tend to offer lower fees, competitive interest rates, and more personalized customer service. They also tailor their services to meet the specific needs of their members and communities, which can make them a better option for people looking for a more local and member-focused approach to banking. Services offered. When it comes to checking accounts, banks offer different types of checking accounts, from basic accounts that don't require you to keep a minimum balance to premium accounts that come with extra benefits like no fees and earning interest. On the other hand, credit unions also provide checking accounts, but they often have lower fees, higher interest rates, and special perks for members like being able to use other credit unions' branches and ATMs without being charged extra fees. You can save your money in a bank or a credit union by opening a savings account. Banks and credit unions offer various types of savings accounts, some of which are designed to help you save for specific goals like education, retirement, or unexpected expenses. Credit unions, being not-for-profit organizations, may offer more competitive interest rates and lower fees than banks. If we talk about loans, banks can help you with different types of loans like personal loans, home mortgages, auto loans, and business loans. The interest rates and terms of the loan may vary based on your credit score, the amount of the loan, and the time you have to pay it back. Credit unions offer various loan options with reasonable rates and flexible terms. Members may get the benefit of lower interest rates and more personalized service compared to banks. When it comes to investing your money, banks offer a variety of investment services, such as brokerage accounts, mutual funds, and retirement accounts. These services are designed to help people who are just starting with investing, as well as those who are more experienced. Credit unions also offer investment options, although they may not have as many choices as banks. Some larger credit unions partner with investment firms to provide products like retirement accounts and mutual funds. Charges. Banks and credit unions have different ways of charging their customers for using their services. Banks usually charge monthly fees for maintaining your checking and savings accounts, which can be quite expensive. On top of that, they may also charge you for overdrafts, paper statements, and keeping a minimum balance in your account. On the other hand, credit unions usually charge lower fees compared to banks. Some credit unions offer free checking and savings accounts, while others may charge very little or no monthly fees at all. Furthermore, they usually charge lower fees for overdrafts and other account-related charges than banks. Let's talk about ATM fees. When you use an ATM that doesn't belong to your bank, you might have to pay an extra fee. This fee can be anywhere from $2 to $5, depending on the bank. Some credit unions have fewer ATMs than banks, but they often work together to offer more options. If you're a member of a credit union, you can use other credit unions' ATMs for free. Some credit unions will even give you back the money you paid in fees when you use an out-of-network ATM. That way, you can save some money and still have access to your cash when you need it. Overdraft charges occur when you spend more than your account balance. Banks generally impose higher fees than credit unions and offer overdraft protection programs, sometimes with additional fees. Credit unions also charge overdraft fees but at lower rates, often providing more affordable overdraft protection programs or lines of credit. Interest rates. If we talk about savings accounts, banks tend to offer lower interest rates on savings accounts compared to credit unions. However, online banks may offer higher rates because they have lower costs. Credit unions usually provide higher interest rates on savings accounts because they prioritize their members' benefits over profits. They may also offer tiered interest rates, where higher balances earn higher rates. For certificates of deposit, banks offer CDs with varying terms and rates, typically ranging from 3 months to 5 years. The rates may depend on market conditions, and longer-term CDs usually offer higher rates. Banks may have promotional rates to attract customers. Credit unions tend to offer higher CD rates compared to banks. They may also provide more flexibility in terms of CD terms and rates, including special offers for members. For loans, banks offer different loan rates depending on the type of loan, the borrower's credit worthiness, and current market rates. Banks may offer fixed or variable rates for loans such as mortgages, auto loans, and personal loans. Larger banks may have more competitive rates because of their size. Credit unions usually offer lower interest rates on loans compared to banks. Their not-for-profit status allows them to offer more favorable terms to members, including lower interest rates and fees. Credit unions may also consider factors beyond credit scores when determining loan rates, such as relationship-based pricing. Accessibility and convenience. When you're picking between a bank and a credit union, it's important to think about how easy it is to use their services. Here are some things to consider. Number 1. Branches. Banks usually have more locations than credit unions. This means it's easier to talk to someone face-to-face if you need help with your account or want to apply for a loan. Credit unions have fewer branches, but some belong to a network where members can use other credit unions' locations. Number 2. ATMs. Banks have lots of ATMs, which makes it easy to take out cash or make deposits. Credit unions might not have as many ATMs, but many belong to networks where members can use other credit unions' ATMs without extra fees. Number 3. Online banking. Banks have websites and apps that let you manage your account and do things like pay bills or transfer money. Credit unions have similar services, but they might not have as many features. So, even though banks usually have more branches and ATMs, credit unions make up for it by belonging to networks. And both banks and credit unions let you do your banking online. Customer service. When it comes to customer service, banks and credit unions are different in some ways. Here are some things to keep in mind. How quickly they respond. Big banks might have machines that answer your questions, which can take a long time. Credit unions usually have people who can help you right away. They try to make things more personal and less frustrating for you. How friendly they are. Sometimes banks are nice and helpful, but sometimes they're not. Credit unions are usually known for being friendly and welcoming. They want you to feel like you're part of a community. How they fix problems. Banks usually have a set way of dealing with problems, which can take a long time. Credit unions want to make sure you're happy, so they try to fix any problems you have as soon as they can. In the end, it's up to you to decide which is better for you, a bank or a credit union. You need to think about what you need from them and what you like. Make sure you check out their rates and services before you choose. Let us know in the comments which one you prefer, and don't forget to like, comment, and subscribe for more helpful articles.